regarding money and banking. Okay, so our economic survey have covered some important events happened in the year 1819 and the half of 1920. So we will discuss what are the major issues being covered in the from the topic money and banking in your economic survey. It is in economic survey it is monetary developments, but as this monetary developments is basically dealing with all the current affairs related with the money and banking, we are dealing at as it is a topic coming under money and banking. We'll see one by one. Okay, so economic survey starts saying that okay, in 1920, in financial year 1920, monetary policy have been accommodative, in the sense that okay, RBI was ready to cut the interest rate. RBI is favoring a policy which is ready to inject liquidity, as well as RBI is ready to cut down the interest rate. Okay, so RBI, this is how economic survey says that. And what economic survey says that okay, in the the year 2019, in 2019, there have been a repo rate cut by 110 basis point. I'm talking about the year. Economic survey is talking about 19 only. It is silent on the year 2020. So you need to know that also. Okay, so repo rate was cut by 110 basis point in 4 consecutive MPC meetings in the this 1920 financial year. Okay, and the reason it is saying is that due to slower growth and lower inflation. Okay, so growth was slow, that is there have been slowdown, and inflation was also lower. So whenever the law of inflation is low, there is a chance that RBI cut the interest rate. At the same time, economic growth was also low. That's the reason why there have been a continuous cut in 4 consecutive MPC meetings in the year 2019. So that you need to keep in mind. Okay. So basically, the interest rate cut of repo is decided by a monetary policy committee. So monetary policy committee's decision was basically guided by the low inflation prevailed in the year early to mid late 2019, low inflation and the need to strengthen the domestic economic growth by increasing private investment in the economy. So in order to increase the private investment in the economy, the interest rate cut have been done by the RBI in 2019. But so this is till now it is mentioned in the economic survey. But for your update, what is the status of? So if you look into this is actually see both the economic survey have given a table like this, but since 1920 gives giving you the latest updates, I am just taking this one only because this is what is important for you. So in the table given in your economic survey, you need to know, see, it is repo rate is given, reverse repo rate is given, and bank rate and MSF rate is given. Okay, so there is one interesting thing here. Bank rate and MSF rate is given. Then CRR is given. SLR is given. Okay, so you are supposed to know about all the concepts related with repo, reverse repo, bank rate, MSF rate, CRR, SLR, etc. Many times UPSC have asked conceptual questions regarding from these topics. Okay. Now, so the economic survey, the latest economic survey has given data till January 2020. So if you look into the repo rate, okay, if you look into the repo rate, okay, there have been a cut in April from 6.25 to 6, then to 5.75, then 30 basis point cut in August, so from 5.75 to 5.0, and in October another 25 basis cut. So this is actually the cut happened in 2019. So there have been steady cut in the repo. Okay, so that you need to keep in mind. Okay, so from 6.25 it was cut down to 5.15, and then regarding a reverse repo, whenever there is a repo rate cut is there, proportionally reverse repo will also change. Okay. So in 2019, one interesting trend about reverse repo is that there is a basic difference of 25 basis point. So when repo rate is cut by 25 basis point, automatically reverse repo will also change 5 points. So there was a 25 basis point difference is there. This happened in 2019. So the difference between repo and reverse repo was changed in 2020 after the corona epidemic. Okay, after the lockdown announced by the government. That I will discuss. Okay, so when you look into the economic survey, this is the data you can see. That is, there is a difference of 25 basis point between repo and reverse repo. And if you take the MSF rate marginal standing facility rate is 25 basis point above the repo rate. So you can see the 25 basis point higher than the repo rate. But another interesting thing what you need to keep in mind regarding bank rate and MSF rate is that, okay, RBI in the last few years have made a bank rate equivalent to MSF rate. So what is the MSF rate? Same rate will be the bank rate also. Okay, both the concept are different, but the rate is the same. Interest rate for bank rate and MSF rate is same. So in the economic survey session, I am not discussing, then we will not able to complete it. So be very clear. One important information. See, why repo rate is called the policy rate? Because RBI only announces, RBI either increases the repo rate or decreases the reverse repo rate. Then what happens is that proportionally reverse repo will change, bank rate will change, MSF rate will change, because reverse repo is 25 basis point lower, MSF rate and bank rate is 25 basis point higher than the repo rate. So what happened? So only RBI have to announce the change in the repo rate, automatically reverse repo, bank rate and MSF rate will change. So this important information you need to keep in mind. If a question comes, you can easily answer. Now table also mentioned about CRR and SLR. CRR is remaining same. Now also it is 4%. Okay. So out of the total deposit, 4% have to be kept with the RBI. CRR is 4. SLR is also very important because RBI have decided to continuously cut SLR rate starting with 19.5. Okay. So every quarter it is cutting. Okay. Now you can see that, okay, in the January it was 18.25, in March it has become 18%. Okay, now SLR is 18% of SLR is now 18% of the total deposit, or another term is net demand and time liability. So these things you keep in mind. Okay, but so this is actually economic survey have covered. But for your update in 2020, things have changed. The difference between repo rate and reverse repo rate have changed. So for that reason, I am discussing this, so that if any question, because the prelims is in October, so there is a high chance that updates in 2020 can also be asked by UPSC. So what happened in 27th March? ST, you know that 27th March, after the government announced the lockdown, 21 days lockdown, 75 basis, there have been repo rate was cut by 75 basis point. That is a huge cut from 5.15, from 5.15, 75 basis point repo rate was cut, and it so in March repo rate became 4.4%, and at the same time when repo was cut by 75 basis point, reverse repo was cut by 90 basis point. So there was no proportional cut. Okay, so what happened is in March, what happened? Repo became 4.4%. In March, I'm talking about March, 4.4%. And what happened is the reverse repo, after the 90 basis cut, it became 4%. So in March 2020, after the lockdown, reverse repo was cut by 75 basis point, reverse repo was cut by 90 basis point. So in March, repo rate was 4.4% and reverse repo is 4%. This is not mentioned in the economic survey, but for your update I am mentioning it. Okay, but again in April, it was not a monetary policy decision. RBI separately again cut the reverse repo by 25 basis point without cutting April 2020, without cutting repo rate. So in April what happened? Reverse repo became 3.75% in April. In May, bi-monthly monetary policy, repo was again cut by 40 basis point. Repo was again cut by 40 basis point. Now, in May, repo became 4%. Now, in May 2020, repo is 4%. And so when there is 40 basis point cut in repo, naturally there will be 40 basis point cut in reverse repo also. So reverse repo became 3.35%. So this is the current status, and in the recent bi-monthly monetary policy, the the repo and reverse repo was made the same. So this is the current status of repo and reverse repo. Now the repo rate is 4%. Reverse repo rate is 3.35%. So there is a 65 basis point difference between repo and different reverse repo. Naturally, the MSF and bank rate will be 25 basis point higher than the repo rate. So that you keep in mind. So this is just for your update. Okay, this is just for your update. So if a question, there is a high chance that UPSC can ask question related with repo and reverse repo or any of these concepts, bank rate or MSF rate, CRR, SLR, etc. in your coming prelims. Okay, next topic is mentioned in the economic survey is liquidity conditions and its management. Okay, liquidity conditions and its management. Okay, what RBI saying is that, okay, in the financial year 17-18 and in 18-19, there have been basically liquidity deficit. The economy have seen liquidity deficit. Okay, there not have been sufficient liquidity in the economy due to various factors. But in financial year 19-20 onwards, liquidity started being in surplus, especially from June 2019 onwards. Okay, so in 17-18, 18-19, there have been liquidity deficit, but in 19-20, especially from June 2019 onwards, the liquidity have been surplus. June 2019 onwards, the liquidity have been surplus. So the money supply in the economy have been increased. That is what you mean by liquidity surplus. So the recent economic survey saying is, the reasons for liquidity surplus from the middle of 2019 is, one is RBI have conducted, this is all these points I have taken from the economic survey. RBI have conducted 4 open market operation purchase auction. Okay, so open market operation purchase. Okay, so RBI have purchased government securities. See, you know that what is open market operation, again a concept. Okay, buying and selling of government securities by RBI is open market operation. Okay, so here 4 consecutive purchase auction. RBI is purchasing government security. Okay, so when RBI purchased government security, what happened? Money will be injected or liquidity will be injected. That is one reason for liquidity surplus. For open market operation or purchase auction have been purchased, not buying. Buying, not selling, but purchase auction. Government securities purchasing. Okay. Then see another current affair. See in March also as well as in April also, RBI have conducted this in 2019. In 2019, RBI have conducted $5 billion buy sell swap auction. Okay, so RBI have went for a swap auction of $5 billion. Okay, RBI generally purchased $5 billion from the various banks and financial institutions. So when RBI purchases a forex of 5 billion, foreign currency assets of $5 billion. So when it purchases US dollar, what happens? In return, it have to pay Indian money. So buying forex results in when you buy forex, you have to pay Indian rupee. So this swap auction, $5 billion swap auction also resulted in more money in the economy. Then there was also Reserve Bank's forex operation augmented this RBI's forex operation also augmented the domestic rupee liquidity, more money in the economy. Then we have seen that there have been continuous reduction in SLR in every quarter, 25 basis point, and it continued till March 2020. Now it is 18%. So reduction in SLR also have contributed to increasing liquidity. And also in 19 compared to the earlier period, there have been more moderation in currency demand. The demand for currency have been moderate, especially during high demand. The demand for currency was very high, especially after demonetization, but in 19 things was moderate for demand, so that has also helped the liquidity to be in surplus. Another reason what the economic survey says that is that the increased spending, more expenditure by the government, net forex purchases by the RBI, and return of currency to the banking system also helped money or liquidity surplus in the economy. So UPSC can ask this question, in 2000 compared to the year 17-18 or 18-19, in 2019-20, there have been liquidity surplus. So what are the factors or what are the reasons for it? So what factors led to liquidity surplus in the year 2019 or 2019-20 financial year? So you can say these are the factors for increasing liquidity in the financial year 19-20. So this can be a potential question because it is mentioned in the economic survey. So see this is actually I have taken the figure from the economic survey. So if you look into this is starting from January 2019. So this is the figure in crore. This is showing, this portion is showing liquidity shortage. This portion is showing liquidity surplus or excess liquidity. So you can see that till May period there have been, May 2019 there have been liquidity shortage or liquidity deficit, but from June onwards there have been surplus, liquidity surplus or excess liquidity. So this is the figure mentioned in the economic survey, not that important, but you should know why there have been liquidity surplus from mid 2019 onwards. Now, another interesting thing which economic survey discussed is the policy corridor and call rate. So normally I told you in 2019, 2020 was different. The basic difference between repo rate and reverse repo rate is 25 basis point. And you know about, so that is the policy corridor. That difference between the repo rate, this red is repo rate, we call it as policy repo rate because what is announced in the monetary policy is basically repo rate. Automatically reverse repo will also change. This green color is reverse repo and blue is weighted average call rate. You know that call rate, it is the interest rate at which money is borrowed on an overnight basis between banks. It is basically interbank call. Interbank, two banks will call for money when they faces any liquidity shortage. So interest rate when bank borrow from each other. So weighted average call rate or call rate normally used to be in between the repo rate and reverse repo rate. So if you look into the trend, we'll see the recent trend. We are interested more in the recent trend. You can see that there have been some situations in which this weighted average call rate have been closer to the reverse repo, but normally this call rate have to be nearer to the repo rate. So there have been differences, but most of the time there are some cases the call rate have gone above the repo rate, which shows whenever the call rate go above the repo rate, it shows that there is liquidity deficit in the economy. So this important point you keep in mind. When the call rate is higher than the repo rate, it shows that there is not sufficient liquidity or liquidity deficit in the economy. But normally like this, the call rate have to be between the policy corridor. So based on the movement of the call rate, whether it is closer to repo rate or whether it has overshooten the repo rate, RBI get to know the liquidity conditions. Okay, this is one of the way RBI have an idea regarding the liquidity conditions in the economy. Just for your understanding, you just keep this in mind. What is this policy corridor, or what is this call rate, and how the call rate moved between the policy corridor in the last few years.